Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, November the 1st. The year is 2023. Let's talk trading. Monthly open with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. So we're going to start the month off right, and we're going to say make sure you use good risk management. Do not lose any more on any one single trade than you are willing to lose. And we are 17 pips below the monthly open on the pound. We are in the lower wick zone of the previous month right now. We're 31 off the high and 35 off the low. We had news drop at the top of the hour that spiked the price, and it's coming back down. For the week, 9 pips above the open, 69 off the high, 42 above the low. And we have the one gap that hasn't filled. Open gap was the Aussie yen. For the day, we're putting in the opening range for the month. We're within the opening range for the week and above the opening range for the year. And speaking about the year, 44 pips, now 45 above the yearly open. Inside bar traders, we had a daily inside bar 8 days ago. We are within that range, and we're still in that monthly inside bar that happened 9 months ago. For today, once again, tight ranges. The pound only 66 pips. We have 6 pairs over 100 and 2 pairs over 200, with the pound New Zealand yen, what I like to call the new beast, leading the charge. And we're crisscrossing across the weekly open at 21.21.8. And let's see, the green rats were feasting this half hour. Red rats also had a chance to go short at the 21.41 area, right at the edge of the rat zone. In either case, if you went long at 21.15 green rats or short 21.41 red rats, you'd be in a profit. And notice we have the pivot trading plan telling us to go long at S1, which was at 21.099, call it 21.10. And that trade would be in about 19 pips of profit right now, even though the Bambino Flex indicator said short, and trading plan was also short at the pivot, and that would have proved to be profitable. Okay, we've taken out the daily pivot. We've taken out the weekly pivot, and we've gotten close to the monthly pivot, but not close enough. We missed it by 12 pips. So Walmal, yesterday I talked to the traders about your trading, not you as in Walmal, but you talking to each trader, saying, you know, what you say you're going to do and what you do, how big of a difference is there?
It can be a huge difference. You saw that the other day with me, where you basically know what I'm going to do. You know, you can, a lot of times you'll even call it out. You'll go and say, you went short there, right? You went long there, right? You exited there, right? You know, and because you know how I trade, because we, you know, for so long, for so many, well, now a couple of years, and so you know what my tendencies are. You know what my trading plan is, and so you can go and call it. But at the same time, a couple of days ago, I didn't follow it. You know, I did okay, but you know, it got myself into a little bit of trouble, and I traded my way out of the mess. And that's the thing that I think that what you mean by what you're trading. You know, meaning, you know, each individual. I can't answer that for a particular trader. You know, I've had traders come to me and say, you know, give me your trading plan, give me this, give me that, and I'm very hesitant to do that, and for a number of reasons, and that is that what works for me may not work for you, and the reason why it works for me is because my psychology, my ability to control what I'm able to do, what's going on between my two ears. You know, my trading plan is based on my strengths and my weaknesses, And I know that these are my strengths, and I'm going to take advantage of those things that are my strengths, and these are my weaknesses, and I'm going to go and try to the best of my ability to stay away from them. And people will go say, well, if you just go and, you say all the time, and I said it, the other day, I think on a video, and that is that you just go and do what you're supposed to do, and then you just go and rinse, wash, repeat. Yeah, it sounds real nice to go and do that. That's what you're supposed to do. But the problem is, if the mechanics involved go against who you are as a person, the rinse, wash, repeat, it's just not going to happen well. And the reason why it's not going to happen well is because your personality, your emotion, your gray matter. We haven't used that term in a while, but your gray matter, is going to go against, what you're supposed to do, unless it's your plan. And so I think part of this journey of becoming successful in trading is you not only got to go and be disciplined enough to follow your plan, but you also got to spend the time sitting there developing your own plan that works for you. And the thing is, I can sit here and make flip-flop boxes work. And, Tiro, I think you can attest that you've seen me do that now for well over a year. I can make them work. But the problem is somebody else could fail miserably over it because it just doesn't work with their personality. They sit there and, we talked a couple of weeks ago about the whole idea of maximizers. There are some traders that want to maximize the profit on every single trade. And the reality is when you're trading flip-flop boxes, that's a fool's game. You just can't do that. And the reason why is because I'm looking for short-term reversal trades. That's what I'm looking for. That's what a flip-flop box is. That suits me and my personality. Get in, get in, get a little bit of profit, and get out. And I'm happy with that. It's sort of like, I think you called it at one point in time, a smash and grab or something like that. And that's all I'm trying to do is just, smash it, get 2 pips, get 3 pips, but get lucky and it runs in my direction. 5, fine, grab 5. Be thrilled with that, but don't be looking for 5, and that's me. Now somebody else, no, they want to stay, they want to go and see the 10, 15, 20, 30 pip run because they look on the hourly chart or they look at the daily chart and say, well, look, we had a range today, like today's range is 66 pips. Man, that means if I could have written it from one end to the other end, I could have made 66 pips. Yeah, you could have, but that's not what this type of method's going to do for you. And so that's why it wouldn't work for you if that's what you're trying to do. And so we need to be very, very careful with that and make sure that we develop something that works. And getting back on topic a little bit, your trade, not my trade, not Kiro's trade, your trade. You got to go and make sure you're trading your trade, what you figured out works for you and your personality, and then, go and develop, the tools around you to keep you inside, like I say all the time, keep you inside the banks of the river. And that means, for me anyway, the most important thing, and I said this from day one, the very first video I did with you was what? Preserve capital at all costs. And it's just that simple. Preserve capital at all costs. That's the most important thing for me. And I'd rather, if that means I'm going to have a losing day, I'm going to have a losing day. I don't, that's no skin off my back. I'm going to have a losing day. But at least I know I can come tomorrow and trade again. And you got to develop your money market. You have money market. Sorry about that. But your money management scheme to go and allow you to do that. And again, for every person, it's going to be different. That's my 2 cents.
Yeah. Well, one of the things you might want to expand on is the stories people tell themselves, traders tell themselves, especially, what does a loss mean? What makes it so hard to take a loss, but it's so easy to take a profit? That's something.
Well, yeah. And I think, I hate to say this, and sorry guys, I'm not going to sugarcoat this. You know why it's hard to take a loss? Because pride, that's what it really comes down to. You have to admit that you messed up. You got to admit that not even that you messed up. You got to admit that you were wrong, okay? Because it was you that pressed the button. You either pressed the button accidentally, means you're wrong. It means that you pressed the button and the market didn't do what you'd expected it to do. You were wrong. Okay? Get over it, guys. We're playing in a zero-sum game here. Sometimes we're winners, sometimes we're losers. So it just, I know that may come across as harsh and mean, but the reality is we don't like to go and have losers because we have to admit to ourselves, which is our biggest critic, that we were wrong. And we don't like to do that. As people, we don't like to do it. And I don't care who you are. Everybody's got that innate part of them to a certain extent that we just don't like to admit. I mean, who wants to go and tell mommy that you stole the cookies out of the cookie jar? You know, we're going to relate it back to when you were 6, okay? And it's the same thing. We don't want to go and admit that we were wrong. We don't want to admit that we're not going and executing our plan properly. We don't want to admit that we're not going and executing our money management strategy correctly. And because we're not willing to go and deal with that part of our personality that needs to be straightened out, we're going to fail. And so you need to get on top of that and basically say, yeah, guess what? I'm a creature that makes mistakes. I'm a creature that's not right about everything, you know, and deal with it. You know, it's sort of like I did some counseling once with this couple that was having problems. They were fighting a lot, and one of the people in the relationship went, you know, was, I hate to say it, but he was right most of the time. And I had to go and say to him, is it more important for you to be right, or is it more important for you to go and save your marriage? Well, in trading, it's the same thing. Is it more important for you to be right, or is it more important for you to go and be able to trade again? You know, we have to go and make that judgment call. If it's more important for you to be right, you know what? Go get yourself a different. Don't be a trader. Go be an analyst someplace. You know, and deal with it that way, because you're not gonna make money as a trader.
Yeah, it pounds back to the daily open.
Yeah, I just saw it. It just went pounded through it. Excuse the pun.
Yeah, it's you know, and the thing, like you were saying about the losses, you know, is it really pride? Because I mean, if the trader was, say, playing basketball or softball or checkers or something, and they lose, yeah, they might not be happy, but do you really think it's an ego thing?
Yeah, I do, because here's the thing, and you see this of all sports. You see it in a game like baseball, okay? Because the thing is, you take the loss, and it becomes an ego thing, and a lot of times, you know, because of the way baseball is structured, you know, think about a series. You got a 3-game series, and you go and you get your pants, you know, beat off of you, and you go into that second game, you know, and you're so angry going into the game because of your ego and everything. And more times than not, after you get your pants beaten off of you in the first game, you wind up actually not necessarily getting your pants beat off of you in the second game, but you wind up still losing in the second game because you can't turn it around because you're so upset about what you did the day before. And unfortunately, that's you know, I think that's an innate part of, you know, most people's personality. You know, you know, and that's not saying something bad about a person. It's just recognizing who we are and then finding a way to deal with it. You have to get to the point where you become, using the political term, laissez-faire, meaning, you know, you just let it go. You just got to, at some point in time, you just got to say, life is unfair. I used to say that to my kids all the time. You know, they would say, Dad, that's not fair. And what I would go and say to my kids is, you're right, life's not fair. Get over it. You know?
Yeah, sometimes it's not fair. And you know what? The fastest 15 minutes in trading is just about over. So, fellow traders, there's Walmal's take on your trading. What's your take? You know, give a comment in the on the video. So, when you come back to trade, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.